17 years after the last Development Finance Institution or DFI, IDBI Limited merged into its offspring IDBI Bank, comes the National Bank for Financing Infrastructure and Development or NaBFID. The new vehicle will supply long-term finance to sectors where commercial banks are not in a position to take on risks. This is mainly because banks are deposit-taking entities with tenures of up to 5 years typically. They run the risk of running asset-liability mismatches when they take on exposure to long gestation projects. The two leading DFIs of the past, ICICI Limited, which merged into ICICI Bank in 2002, and IDBI Limited, opted to become banks because the business model was not viable anymore. And most of the banks today are primarily into retail and corporate lending of much shorter term duration. This created a vacuum. Which entity would finance infrastructure projects? Enter NaBFID. NaBFID may raise money in the form of loans and otherwise, both in rupees and foreign currencies, or secure money by issuing and selling various financial instruments, including bonds and debentures. NaBFID may borrow money from central government, Reserve Bank of India, scheduled commercial banks, mutual funds, multilateral institutions such as the World Bank and Asian Development Bank. Sovereign support is on offer. The government will also provide grants worth 5,000 crore rupees to NaBFID by the end of the first financial year and provide a guarantee at a concessional rate of up to 0.1% for borrowing from multilateral institutions, sovereign wealth funds, and other foreign funds. Costs towards insulation from fluctuations in foreign exchange may be reimbursed by the government in part or full. Upon request by NaBFID, the government may guarantee the bonds, debentures, and loans issued by NaBFID. The big positive is the prior sanction for investigation and prosecution. No investigation can be initiated against employees of NaBFID without the prior sanction of 1. The central government in the case of the chairperson or other directors, and 2. The managing director in the case of other employees. Courts will also require prior sanction for taking cognizance of offences in matters involving employees of NaBFID. What will be critical for the success of this new DFI is how it will straddle various components of the financial market, debt, equity, forex, and money markets, so that it can structure offerings to mitigate risk to itself and borrowers. This is easier said than done. Yet, another concern is the local market still has a long way to go. And then, of course, you have the perennial worries: ill-conceived projects, poor underwriting, and not to mention delays on the policy front.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.